Destination Africa, brought to you by Standard Bank.
Welcome to Destination Africa with me, Alishia Seckam. Well, Merrill Lynch has reported that Africa's healthcare industry is now in the continent's top 5 most promising investment areas, right after the telecom and infrastructure industries. Although private healthcare is not necessarily new to Africa, the continent's growing middle class has certainly attracted more investors towards the healthcare space. US-owned GE Healthcare already has operations in Egypt and Nigeria to build well-equipped hospitals through PPPs, while Goldman Sachs and Pfizer are funding Africa's healthcare sector through the Investment Fund for Health in Africa. And GlaxoSmithKline, the world's second largest pharmaceutical company, is investing nearly $100 million over the next decade to sell improved, accessible medicine in Africa. And the list goes on and on. But to take a closer look at the investment case the sector puts on the table right now, independent health economist Alex van der Heever and Fungayi Chamba, who's head of Africa operations at Pharma Dynamics, join me now in studio. Thanks so much, gentlemen, for joining me this afternoon. Alex, let's perhaps start off with you here in Johannesburg. What kind of investment merit does the sector boast at the moment? Because we often speak broad strokes of Africa's rising middle class and how that's elevated the status of the African consumer. So one assumes that it translates to an increasing demand for better healthcare products and services in sub-Saharan Africa as well.
Healthcare is one of those sectors that organically responds to changes in economic growth and increases in particularly the sort of income earning groups and the middle income groups. So as that expands, one would actually expect that the healthcare sector will naturally respond to the inevitable demand that will arise. And in particular, there will be the demand given that a lot of the public health facilities within Africa are not always very good and not always very well run. So you'll find almost immediately a response from private systems.
Yeah. Let's bring Fungayi into the conversation. Fungayi joining us from our studios in Cape Town. If we get specific, Fungayi, what kind of growth has the healthcare sector seen over the recent past?
I think that we've seen considerable growth and allocation of funding for health in Africa. The challenges, I think, have been more around the fact that do the different countries have the capabilities, both from a resource as well as infrastructurally, to channel that funding and support in the most effective way.
Taking a look at a 2007 report by the International Finance Corporation, Alex, it estimated that the market for healthcare in sub-Saharan Africa will more than double by 2016, going up to $35 billion, and that the private sector would provide up to 60% of the required finances going down that route. How viable a target and projection is that?
Well, that I think is, would be consistent with a sort of general view of the region and the area. You would expect that if economies are growing between sort of 6 to 7% per annum, that in essence they're over a 10-year period that implies that their GDPs will double. And with that, you're going to have, in fact, a more than proportional increase in the demand for healthcare associated with that, because it tends to increase more than proportionately with growth in incomes. One of the factors that will affect demand, though, is really how it's being purchased. How is the healthcare being purchased? Is it out of pocket, or is that the only market developing, or is that coherent insurance market evolving and developing? That will fundamentally affect what kind of demand actually arises. A lot of the countries in the region do have health insurers and medical schemes that are sort of relatively sort of coherent, but most of the environments, most of the countries have quite weak regulatory frameworks around it, but that doesn't necessarily affect a lot of the growth in the insurance market itself. But certainly that affects whether or not the catastrophic side of healthcare is covered and funded. If you don't have coherent insurance, and essentially you have an evolving out-of-pocket market, which may still be quite a viable and very large market, but it's not quite the same as your sort of hospital-based services, and which tend to be at the higher cost side.
Fungayi, take us through your exposure to the markets right now and just what kind of demand you're seeing and from where it's most apparent.
Yeah, I think that the reality, just to add on to what my colleague was saying now, is, with even where you've got national health schemes available, they tend to favor those individuals that can afford them. Mm-hmm. So, if we take, by example, countries like Zambia, for instance, that subscription is much less than 4%. Nigeria would be less than 3%. Mozambique is maybe as much as 10%. And even here in South Africa, I think that your subscription to the National Health Scheme is only as much as 16%. So I think a lot of funding, there'll be still a lot of out-of-pocket funding for health and healthcare provision. And also, we've got to remember that the demographic that we're seeing is that still a large sector of the populations is a rural population. So they would be the ones by far that have a burden of needing to or not being able to afford access to health and medicines.
So with that being the scenario that investors within this space face, Fungayi, I mean, to what extent has the sector caught the attention of investors? I mentioned right at the top that you've got, the sector becoming more prominent. It's amongst the continent's top 5 most promising investment areas, but still reports saying that it's not a major beneficiary for positive investment trends if you're comparing it to sectors like telecommunications, financial services, mining and infrastructure as well.
I think that I'll have to answer that by saying, well, traditionally, health has been viewed as a responsibility of government, and from that then implies that it's very regulated to some extent. There isn't, I think, enough autonomy for private sector players and individuals to get on with the job of supplying the services, and certainly to the extent to which they can do, and deriving the benefit to remaining profitable within their businesses. So I think there's a balancing act that needs to happen there in terms of government acknowledging the fact that if we are saying as much as 50 or 60% of the sector is funded by private organizations, then there must be an allowance for them then to be able to work diligently within that space with some autonomy.
Alex, do you agree with that kind of statement out there? Because that seems to be the broad consensus that those represent some of the key challenges and act as deterrents and barriers to entry within the sector.
Yeah, I think you're going to have a number of sort of factors that affect the nature of the development of the healthcare markets within the region. One of them is the government response. Mm-hmm. Government response through public services, and also government's response through regulating both the provider side of the health system, the supply like pharmaceuticals, as well as the insurance side. I would not expect, and I don't really expect, the region to respond as quickly as the environment is likely to change over the next 10 years. I actually would expect that a lot of the private developments are going to happen despite government interventions. How coherent the protective effect of the healthcare system is overall is going to depend on how smartly governments intervene. But if they don't, it doesn't mean that the market doesn't evolve. I would expect that with that kind of level of growth, the amount of money that's going to actually flow into healthcare through government expenditure is also going to increase significantly. But I would also expect that the private markets would develop on their own as well. So if government is not very effective in regulating the framework, you might expect fairly significant organic growth in a lot of the provider side. You do have problems on the insurance side if you don't regulate it effectively, because it leaves out a lot of care and it tends to exclude high-risk groups, which means that a lot of your catastrophic expenses are not properly covered in the private sector, impacting on demand. In other words, that becomes a burden for the state systems to cope with. So I would expect though that regardless of government intervention, the sectors are just going to naturally evolve.
that where the incentive is return on investment at the end of the day. Every investor is interested in the potential for return. So let's take a look at what we're looking at if we break things down here, because it's very hard to look at the healthcare space holistically, starting off with the largest private healthcare segment in sub-Saharan Africa, and that being the health services provision. What exactly are we looking at in terms of potential for return on investment there?
Well, firstly, the return on investment on the provider side and all of the supply side depend very much on, again, the sustainability of the funding framework. Mm-hmm. And if it's insured, it actually introduces a degree of sustainability into the funding side, and it changes the return on investment possibilities and the risk structure of investments. So, for instance, if you only have an out-of-pocket market and weak insurance, it means, and also unsophisticated insurers, it means that hospital-based services, there's a degree of risk to setting those up, because you can't be sure you're going to be paid. And there's a risk management side in that people who can't pay or who might pay you, the bad debt risk is very significant. And then a lot of pharmaceuticals, medical supplies, medical devices flow through the hospital platform. So essentially, if a hospital platform, if there's a lack of certainty of a coherent insurance market or a coherent public system, then in fact those investments are affected. Doesn't mean that they're not viable, it just means that they're affected.
Absolutely.
The out-of-pocket markets, your sort of retail, your purchase of drugs, over-the-counter medicines, things like that, and the services provided by general practitioners, could expect to evolve despite an insurance market. So if that's not there, it means that those areas do actually evolve, including the medicine supply into that market. So now a lot of the region has actually does have an insurance market that has developed, and I'd expect the two to develop together. And I think that as the private insurance market evolves, I would expect that a lot of those major areas of investment will actually be viable.
Fungayi, where that is the expectation, we've got to consider the risk that these players and investors are taking on heading into this category specifically. Returns would be derived from a diverse range of offerings that can be put on the table. You've got inpatient and outpatient care, preventative care and diagnostic services, where diversification in theory mitigates risk. What risk do you face in this sector or this space within the healthcare sector?
I think that the risk really has to be around the fact that are you getting returns for whatever investment you're putting in, because obviously you need to strengthen the healthcare, the existing healthcare system in terms of the asset base that is there, and you need to be saying to yourself, well, to what extent is government going to create an environment that is conducive for that strengthening of the asset base, to allow you to be able to realize the return on your investment.
Well, after the break, we'll be exploring other avenues of investment within the healthcare space in sub-Saharan Africa with both independent health economist Alex van der Heever and Fungayi Chamba, who's head of Africa operations at Pharma Dynamics. So don't go away.